Hello. DST Investments is a consulting service provided by Fiduciary Capital Management, LLC, a registered investment advisor, also known as an RIA. Fiduciary Capital Management provides real estate investment advisory consulting services on Section 1031 and Section 1033 tax-deferred exchanges, and Delaware Statutory Trust, which are also commonly known as DSTs. As a registered investment advisor, we advise clients as a fiduciary, putting our clients' interests first. Our DST consulting team is also duly registered under FINRA member broker-dealer. As a private fund advisors, we have access to many DST sponsors, including many Section 1031, Section 1033, and Opportunity Zone solutions. We are independent advisors and not connected to any one sponsor. In our world, we actually spend a good deal of time just conducting research and due diligence on these sponsors and their investment solutions, which change weekly. We need to be on top of our game so we can help clients make the proper decisions based on what the landscape looks like. As an asset class, we love real estate due to its ability to provide investor tax-favored cash flow, the potential for capital appreciation, tax advantages, estate planning, and overall wealth building benefits. Worth mentioning also is that real estate as an asset class has demonstrated low correlation to the stock market. So overall, an effective way for investors to diversify investment portfolios to reduce volatility and market risk. Today, in this short video, we shall review the basic elements of what a DST is and how it can be used either as a cash investment or as a solution for those seeking a 1031 tax-deferred exchange replacement asset. We will also discuss how DSTs are offered to investors who must be accredited to meet suitability requirements established by the financial regulators. So what is a Delaware Statutory Trust? A Delaware Statutory Trust is a separate legal entity created as a trust under Delaware statutory law and allows for a co-ownership structure under which multiple investors pool their funds to own one or more entire real estate investment property. Minimum investments are typically as low as $100,000, meaning a single investor potentially may own an undivided fractional interest in a portfolio of real estate properties and participate in a prorated share of its net income, tax benefits, and potential growth. Many high net worth cash investors have learned the benefit to place their cash into a DST investment for income, appreciation, and their unique underlying tax benefits. But most DST investors utilize an Internal Revenue Code Section 1031 tax-deferred exchange as their vehicle of choice. A 1031 exchange allows investors to defer capital gains taxes and avoid depreciation recapture by reinvesting the proceeds from the sale of investment property into one or more replacement properties within a DST vehicle. With a DST, investors may also gain additional property diversification, are relieved from active management, all the while maintaining the inherent capital appreciation and tax benefits of real estate. It's that simple. Tax deferrals can be continued through as many exchanges as the investor wishes, with a step-up in basis to the investor's heirs. Accordingly, a 1031 tax-deferred exchange may potentially be used as a powerful wealth-building tool. A professional tax advisor should be utilized to ensure that every requirement of Section 1031 is met. 1031 investors are often rushed by the timing of their transaction, thereby making it difficult to gather enough information to make a suitable decision. At DST Investments, we open the door for our clients to replacement properties and sponsors identified through careful due diligence and research. In addition, due to the lower minimum investment requirements, our approach allows both cash and 1031 investors to diversify into a portfolio of properties consisting of different assets, tenants, and geographic locations, all without the ongoing property management burdens or financial obstacles. In a 1031 transaction, don't overlook the timing aspects, which, if not followed by the strict IRS timetables and rules, will cause a taxable event. A qualified intermediary is a critical partner in the process, so contacting us as soon as possible is important to protect the real estate investor from taxation. DST offerings are structured and offered as securities under the Securities Act of 1933, which requires the investors to be provided with a private placement memorandum, or PPM. The PPM discloses various risks, fees, and expenses associated with the 1031 exchange and the DST investment offerings. The PPM will also outline that potential investors must be accredited, which means they must have a net worth of $1 million or more, not including their primary residence, or have an income over the past 2 years of $200,000 for an individual or $300,000 for a couple. Business trusts and other entities may also qualify as accredited. Accordingly, the investor can now enjoy the best of both worlds, the disclosures of a security and the tax advantages of real estate. This video is not a complete explanation of all 1031 scenarios and does not contain all the details of any particular DST investments. As described previously, those details would have been outlined in a private placement memorandum. Please let us know how we can assist you. For more information on current DST opportunities, or if you are within the 1031 identification process, please contact us as soon as possible to review your situation and financial objectives. Thank you for listening.